Market news now. Asian shares stepped back on Tuesday after China cut its economic growth target and pledged measures to support the economy amid growing challenges from rising debt and a dispute over trade and technology with the United States. Beijing lowered the growth target for this year to 6% from 6.5%. As expected, offered more stimulus, including cuts in taxes and social security fees, increases in infrastructure investment and lending to small firms. Losses also spread to Hong Kong after a recent market rally. The Hang Seng was marginally moved to 28,955 points, while the Nikkei slipped over 0.5% to 21,705 points. At the close, the Shanghai Composite Index was 0.9% at 3,054 points. Wall Street's major indexes fell on Monday, weighed down by a weak U.S. construction spending report and declines in healthcare shares as an initial rally on optimism over U.S.-China trade deal faded. The Dow Jones Industrial Average fell off 0.75% to close out at 25,821, while the S&P 500 was down 0.33% to 2,792, and the Nasdaq Composite was down 0.25%, hitting 7,577 points. For more on the markets, we cross to Arabile Gumede. He's at the JSE. Good afternoon, Arabile. Over to you.
Yeah, good afternoon, Nzinga. Well, the market not doing so well as one would have hoped, obviously. Around 0.1% down thus far for the JSE All Share. The Rand also not necessarily reacting positively to that GDP number, and perhaps that dollar strength really weighing heavily on South Africa's currency. We'll continue to unpack how things have fared as well. We are, of course, in earnings season here locally, and a lot of earnings results have come out, the likes of Nedbank as well. Even the likes of Clover have even come out with earnings, even the likes of Attack, and we'll try to go through the mire of all of that in a moment or two. But let's check in on those European markets, and then we'll get into the markets here locally as well. As you can tell, the market, they're not doing any sense of positivity, as shall I say, as we take a look at it there. So let's chat about everything that's happened thus far. Travis Robson from IG South Africa joining us as well here in studio. Travis, thank you so much for the time. Let's talk about that GDP number to start off with, if we really can. 0.8%. It's better than the 0.7% that was expected for the year, that is, as we got 1.4 in the fourth quarter. But that number really doesn't change anything, does it?
No. Excuse me. If you look at the numbers, like you say, 1.4 growth for Q4. If you look at Q3, I think we had 2.2% growth. What we really wanted to see was it's coming to the end of the quarter. Therefore, from a yearly basis, we want to see what the number is. And we found an annualized number, as you mentioned, of 0.8%. But really, if you look at digest the numbers in totality, you're looking at a trajectory for growth required to create jobs, sustainable unemployment, sustain the employment numbers. We're looking at least 5%. So we're far off from that 5% number, from an annualized number. Yeah. However, the numbers aren't bad. And I think we also haven't digested what's going to happen the next quarter, which is going to be impacted by load shedding. Yeah. So those numbers are going to be subdued. So this, 5% growth number is very, very far away from 0.8 where the currently is sitting at the moment, and I think that's why the market's digesting the news it is at the moment.
Look, and one would say that you can only hope that it does bring some sense of positivity nonetheless, even though you will have the impact of the load shedding, because the first 6 months of last year, we were in a technical recession. So we have a very low base to work from, but there's still no sense of positivity coming through from that.
And the question I want to ask you is, should we be in a technical recession? We shouldn't be facing a technical recession. We should be one of the top African countries, growing with our competitors like Ghana and Egypt, and having nice sustainable growth above 5%, 6%, 7%. However, we are floating around sub 1%, which is dangerously low, and especially in a country that needs to grow employment. And you look at how our unemployment rate is sitting at around 27, 28%, but real unemployment is far higher than that. There's a lot of work to be done to improve it. However, I think government has been on the forefront trying to improve numbers. We've seen, if you're looking at, let's take this 1.4%, a big percentage of it was influenced by the financial sector. A second was the business sector. And these sectors are where we're seeing a lot of capital injection, especially from foreign inflow, which is very, very important for our economy. I think where we're struggling is obviously agriculture and the mining, and I think the retail to some degree, and that's going to continue to happen for some time. But it's good to see growth in the financial sector, growth in the business sector, and we just need to tick away and slowly improve those numbers.
As you speak about the financial sector, Nedbank releases their full year earnings, 14.5% growth in headline earnings on that front. Doing very well as well, taking into account EcoBank, with, yes, maybe a small part of their business, but they'll certainly be glad that that's happening.
Yeah, I think a lot of investors, and I myself, were expecting a lot more from EcoBank based on the customer size within Nigeria. And that's important for the business, especially when you're looking at acquisitions to obtain growth from African companies. But overall, good, decent results. Nedbank, I think, sits shy of First Rand and Standard Bank. We have got ABSA coming out shortly next week, so that'll be interesting. I think it does float with you've got Capitec on one side going after the low LSM clients, and now starting to go into that medium, higher, more attractive revenue earning type of client. But overall, decent results for Nedbank. However, not as good as the likes of Standard Bank and I think Capitec.
Also then, Clover releasing a set of earnings as well on that front. Is the sustainability of that company really seen as being at the forefront of its own sector, shall I say? Is it really one that you'd look at and say, yeah, that's still worth getting into?
I used to look at it quite a while ago, and it was a stock that I traded myself, and I liked the company. And back then they had a massive restructure because there was a concern about Clover itself as an entity distributing milk to itself, in inverted commas. And I think they resolved that, and that's reflective in these results. So you've seen a good volume sales numbers up. You've seen the changes within their product diversity in terms of higher margins within the yogurt and the olive oil business, which is nice to see. You've seen some nice JVs within the brand. You're looking at Future Life and a couple others in the beverage sector, which is very interesting. So overall, I think the company is well diversified. They've had senior changes and high management. So you're looking at an executive team that's fairly new in terms of new CFO coming in. And I think there's still some time to see how this company produces. So good restructure. You could say cyclical in nature by the nature of the products, but I think they're starting to diversify away from the traditional milk. And like you're saying, these results affected well by yogurt, as well as also by the olive oil business that they've got within that stable.
Yeah. Travis, really appreciate it. I mean, we could have even chatted about Exxaro coming out with a sort of a trading statement on that front as well, seeing that the mining sector is one of keen interest, but we'll hopefully unpack those as those numbers come out as well. Travis Robson from IG South Africa helping us unpack that market picture a whole lot. As I said, a whole slew of economic data to have come out, even the likes of Royal Bafokeng, Platinum, even Attack coming out with earnings as well today. So much more that we could have focused on. But in a moment or two, we will chat to the CFO of Nedbank, Raisibe Murati, just with regards to those earnings. The rest of Africa, how significant is that to their business, and do they look to be at the forefront of leading the banking sector, and in which way do they plan to take advantage of that? For now, let's take a short break.